4. Reversal trading, betting on the reversal of a trend after a significant move. Example: shorting a stock after it has rapidly risen and shows signs of peaking. Section 5. Key terms in day trading. 1. Bid-ask spread. The difference between the buying price, bid, and the selling price, ask. Example: if the bid price is $50 and the ask price is $50.10, the spread is $10. 2. Volume. The number of shares or contracts traded in a security or market during a given period. Example: high volume indicates strong interest and liquidity in a stock. 3. Volatility. The rate at which the price of a security increases or decreases for a given set of returns. Example: stocks like Tesla are known for their high volatility, providing opportunities for day traders. 4. Liquidity. How easily an asset can be bought or sold in the market without affecting its price. Example: highly liquid assets like Apple shares can be traded quickly with minimal price impact. 5. Leverage. Using borrowed capital to increase the potential return of an investment. Example: with 10-1 leverage, you can control $10,000 worth of stock with just $1,000 of your own money. Section 6. Tips for successful day trading. 1. Educate yourself. Continuously learn and stay updated with the market trends. Example: take online courses, read books, and watch tutorials on day trading strategies. 2. Start small. Begin with small trades to understand the market dynamics without risking too much capital. Example: instead of investing $10,000 in one go, start with $1,000 to test your strategies. 3. Develop a trading plan. Outline your strategy, including entry and exit points, risk management, and trade size. Example: plan to risk only 1 to 2% of your trading capital on any single trade. 4. Use stop-loss orders. Protect your investments by setting stop-loss orders to limit potential losses. Example: if you buy stock at $100, set a stop-loss at $95 to cap your losses at 5%. 5. Stay disciplined. Stick to your trading plan and avoid making emotional decisions. Example: don't chase after a stock that has already made a significant move. Stick to your predefined strategies. 6. Keep a trading journal. Document your trades to analyze your performance and learn from your mistakes. Example: record why you entered a trade, how it performed, and what you could have done differently. Ready to dive into the fast-paced world of day trading and start making profits? Hit that like button if you found this video helpful and drop a comment below with your thoughts or questions. Don't forget to subscribe and join our community of savvy traders. Your journey to mastering day trading begins now. Subscribe to our channel for more in-depth tutorials, market insights, and trading strategies. Turn on notifications so you never miss an update. Together, let's conquer the day trading world and achieve financial success.